In this video, I want to introduce a special indicator on TradingView that is designed for scalpers. So if you trade on low time frames like 1 minute or 5 minutes, this indicator is built for you. To add this amazing indicator to our chart, here we click on indicators and we search TMO scalper, this one, which is written by INL Capital. Alright, this is the indicator, and as you can see is added here below the chart. It is actually an oscillator, and as you can see we have some lines that are moving above and below the center line, which is 0. This indicator is built based on TMO, True Momentum Oscillator, and by the help of a special calculation, it's designed for scalping on low time frames like 1 minute or 5 minutes. In this indicator, we have 3 multiple time frames TMO oscillators. This one that is moving faster in compared to the other ones is TMO1. This one that we have it here in the middle is TMO2, and this one, which is the slowest one, is TMO3. If you go to the settings of the indicator, you can see that for TMO1 the time frame is set at 1, and for TMO2 the time frame is set at 5, and TMO3 at 30. So basically we have the most amount of noise or movement with TMO1 because the time frame is set at 1, but for TMO2 we have less amount of movement because the time frame is set at 5, and here the TMO3 is the slowest one because its time frame is set at 30. This default settings of the indicator is suitable for catching the fast movement of the market, for example on 1 minute time frame, and this is what we are focusing in this video. As you can see, TMO1 is giving us buy sell signals. The red triangles are sell signals and the green triangles are buy signals. They are based on the crossover of the two lines in TMO1 and also depending on the color of TMO2. When TMO2 is red and we have bearish crossover, the indicator shows sell signals, and in times that TMO2 is green, when we have bullish crossover, the indicator shows buy signals. The TMO3 can also be used for identification of longer term trend and more confirmation, but in the method that I'm going to teach you, we're not going to use TMO3 because it can add unnecessary layer of filtration and losing some good trading opportunities. Anyway, this is a scalping indicator, and in scalping trading strategies we want to catch very short term and sudden movement of the market and quickly take our profit. So in case if you find TMO3 distracting, you can go to the settings of the indicator and you can easily turn it off here by turning off show TMO3. Alright, now let's see how we can find trading opportunities by the help of this indicator that is designed for scalping. For taking these buy sell signals, we have two conditions. First, in TMO2, the lines of TMO2 shouldn't be on each other and there should be a distance between the two lines like here, because when we have a horizontal line that shows flat market, but when you see there is an at least acceptable distance between the two lines, you can say that there is a pressure in that direction. So when TMO2 is red and we have the lines like this, I mean we see distance between the two lines, we can say we have high selling pressure in the market. And on the other hand, when TMO2 is green and we have the lines with distance from each other, we can say there is high buying pressure in the market. So when you see the lines are flat with no distance between them, we don't take the signals because this situation can show flat market. Another criteria is when we have a sell signal, it shouldn't be in oversold condition, and when we have a buy signal, it shouldn't be in overbought condition. Here this area is oversold and this area is overbought. Alright, let's see some examples so you better understand how this works. Here these two buy signals are rejected because we have TMO2 horizontal with no distance between them. This sell signal here is also rejected because we have same condition for TMO2, but the sell signal here is a confirmed signal because first there is a distance between the two lines of TMO2 and the signal didn't happen in oversold condition. So this sell signal here is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss for this trade is placed above the previous swing high and the profit at 1.5 risk to reward ratio. Here we have another sell signal, but this one is rejected because we have it in oversold condition. But for example, this sell signal here is a confirmed signal because it is not oversold, but it is also in overbought condition, which is a favorable condition for a sell signal. So we have higher probability for this signal that happened here. And when we check TMO2, we can see that there is a distance between the two lines. So this sell signal here is also confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and this is also a profitable trade, as you can see. Moving on the chart here, we have a sell signal, but it is rejected because you can see that the lines are very narrow, not meeting our expectation of having a good distance between them. Here we have a buy signal, and for this buy signal you can see we have good distance of the lines in TMO2, and we have this buy signal in oversold condition, which is favorable for our buy signal. So this signal is also confirmed, and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and this is also a profitable trade, as you can see. For this buy signal that we have here, this is also a confirmed signal, so we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and this is also a profitable trade, reaching to the expected target of 1.5 for our risk to reward ratio. One good point about this setup is that it can help you to find trading opportunities in the earliest stage of movement, so you can set your stop loss pretty tight and quickly take the expected profit target of 1.5 risk to reward ratio with a proper risk management strategy based on the level that you intend for setting your stop loss, and also based on the balance of your trading account. A correct amount of position is calculated, so you will be sure that, for example, for $1 of risk you will have $1.5 profit. Actually, risk management is the most important factor for you to become a successful trader, because there is no indicator or strategy that can give you 100% guaranteed signals. Losing positions are always part of the game, and you need to manage them properly. Otherwise, your losing positions will be out of control and you will definitely lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping and day trading. As I mentioned earlier, by the help of your stop loss level and your account balance, it calculates your position size in a way that you will lose only 1% of your trading account in case if the price goes against you and hitting your stop loss. I have a complete guide to this risk management strategy. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.